Hey, it's Matt with PriceActionTradingSystem.com, and it's Tuesday, it's June 9th. This will be our chart lesson for the day. And yes, I'm back. I was in and out of my appointment. I was back here at the office by 9 o'clock, so I was back in time to do the mid-morning chart, get it posted, and also pretty much had a regular day. I didn't trade, but just maybe an hour after I got back. But for the most part, I had a regular day. So anyway, mostly a range day today. You can see that we're really, there's not mostly, it is a range day. We were in this real tight range early on, and then once we broke higher, you just measure the lower version of the channel, and that should be your target to the upside. And you can see that's where we traded up to. We actually broke above that once during the regular trading hours after 2 o'clock. This is still regular trading hours, I guess, but during our trading hours, we've only broke higher once, and we still were, for the most part, trading in here. You can see we pushed higher a couple more times and then finally sold off, and we're really bouncing off what was the resistance is now just a midline. So now we're just trading in the upper half of this trading range. So really it's just a trading range today, and we spent until we broke out here, we were in this trading range. And so a couple of things I'm going to say, and make sure you're listening. Make sure you hear what I'm about to tell you. On range days, we are not looking for second entries. Now, if you get a trend like this that's working higher, sure, you can start looking for second entries then. But when you're just chopping around in here, don't try to trade second entries, because you'll just get chopped all to pieces. I say this every time there's a range, and then lo and behold, we'll have a range day, and somebody will say, you know, it just seemed I'm just getting chopped all to pieces on second entries. Well, that's because when you have a range day, we're trading range rules. We're not looking for second entries necessarily. Now, again, if you get a trend that's big enough like this, sure, trade your second entries, and you might even look for some second entries coming down this trend line. But when you're just chopping around in the middle like this, when you got these little short minor, you forget about it. There's not even hardly swings in these. Or just each swing is just a leg. As you can see, you can't trade second entries like that, because it's just one leg down, one leg up, one leg down, one leg up. We finally got a little trend going here, and then we had another one back up. So there, yeah, if you get a second entry at the key entry point, by all means take it. And even here, when you're just looking for shorts off this side and longs off this side, if you get a second entry with your setup, by all means, that probably just leads more credence to the fact that's probably going to be a good trade. But you aren't looking for second entries. So I hope that's clear. And that's where a lot of people get confused on that. And then one other thing that I've gotten several emails about today. So I don't know if you guys are all sitting in some chat room talking about this, and then somebody says we need to ask this in 4 or 5, because it just seems funny. I'll get 4 or 5 of the same questions, exact same question, like y'all were all together talking about it, and everybody decides to go ask me about it. But it's fine. But I'm just saying, it's just kind of odd that I get the same question. Seems like that happens a lot lately. If I get a question, I'll get that same question 4, 5, 6, 7 times that day, and it'll be the same question exactly. So, but anyway, on second entries, when you're entering the second entry, you don't wait for the second entry to trigger and then place your order. You're anticipating the second entry triggering in advance, because you're reading the chart and you're saying, hey, prices are working down. Just as an example, let's just look at one here real quick. I don't want to spend a lot of time on this because it's just a waste of time for most people. But there's so many new people. But notice you got a new swing low. So you're working up, you get a first entry right there. And then we go higher again. Well, it's right there at the key entry point. So once that bar completes, so that's what it would look like on the right side of your chart. As soon as that bar completes, you're already thinking ahead of time. Now, if this bar completes and prices break lower right here, that's a second entry short. Okay, I turned my ringer off there, but I had a phone call, so I don't get any more interruption. But anyway, you're working up here and you get your first entry, and then you started higher again, and notice how the trend line tends to be holding right there. So you're anticipating this happen. You don't wait till it triggers, till it breaks below this bar and triggers it. As soon as this bar closes, you drop you click right there and you drop your order right in there. And once you drop your order in there, if it ticks lower and triggers the trade, then there's your second entry, and hopefully you read it right and it sweeps you right on into the trade. But you don't wait for it to break lower and then put your order in there. So make sure you understand that. This is not complicated, but you got to follow the rules. And once your order's triggered, your stop, this is your signal bar, your stop has to go one tick above that bar, nowhere else. And you can't move it until you've scalped out. So if this was your entry up here, this would be your signal bar. The signal bar always makes the highest point in the swing or the lowest point in the swing. If you were trying to go long, it would be right here. Of course, you're not trying to go long there. I'm sure there's probably somebody here that's watching that probably did try to go long there, but you just came off the top of a range. And I keep getting people that you get a breakout here and it comes back in and down and comes all the way back to the low and bounces, and they're calling that a breakout pullback. No, if a breakout pullback would be if prices broke above this resistance and pulled back and tested that resistance and it turned into support. That's a breakout pullback. But quit trying to trade those, because as I teach you in the manual, 90% of them are going to fail. So a breakout pullback entry is probably one of the least reliable trades we take. So either take no trade or try to fade the breakout. That's the proper way to try to trade a range. Now, if you get down here and you get a big breakout like this, notice that you know here, eventually it's going to come back. But when it's trending that strong, stay with the trend until you know it's trending the other direction. Or you get something like this, a triple test up here or something of that nature. And we'll talk about that trade when we get to it. So anyway, I hope that's clear. So let's just talk about the trades. We're already 7 minutes into this thing, and this was a range day, and the support is down here, but notice how we found support and we came back, we tested it. We made that low. We actually made the low here. We tested it once, we tested it twice, so there's a double test there, but then we come back and test it again right here. And this is a second entry long, way away from the EMA. Notice that high, pull back first entry, and then you get another leg down. There's a second entry long right there. And it wouldn't have been much more. Well, actually, it didn't matter because your safety stop goes here. So even though you wouldn't have got a runner there, you still get another chance to enter here. You still wouldn't have got a runner. But those are two great trades. Just buying your support just moved up a little bit. But you need proof that that's support. If you just went long there and this wasn't over here, that'd be even though it's a second entry and it's a little bit away from the EMA, that'd be pretty aggressive because you do have a trend line working down through there. But we would trade this, and I did make this one green because you're better off to see if you get a little higher or low, which you do right here. And also on this one, I don't know if it broke higher or lower first. I'm not sure because I wasn't back here yet. But assuming it broke lower first and then turned up, you would go long here one tick above that bar when prices shot back through. So again, you would be, when it broke lower and turned and starts trading back up, you're thinking, hey, if prices break above this bar, that's another second entry because this is basically a double top up here. So I could treat that like another second entry. Plus it's another bounce off support that's bounced that I could have got a trade every single time. So it has a high probability of being successful again. And so I would put my buy stop right there, and when it shot through, I would have got filled, and I'd still had plenty of room back to the EMA. If you wait till here, now you're right back into the EMA. You may still take that trade because this is a range day and this is proven support, and you might get you're probably going to still get a scalp out of it, and you might go all the way back up to here. So, but it gets a little more risky by going long here, the better trade, because this is where you want to get long down here at the low. And if it did break higher first and then back up, the way you'd probably want to enter this is until this bar, actually if it broke higher first and turned back, your stop would probably be right there and you'd get stopped out. But then when it turned back up, if it went back through again, I'd probably jump back in there. So, but if it broke lower first and turned up, there's no doubt you go long right there. I mean, you want to get in as close to this line as you can with plenty of room back to the next resistance, which would be the EMA. And you see we did still get a little resistance even though it pushed on through before it turned down again. So both of these you could look at them as second entries, and they're double and triple test of this support. This is proven support here, so it's a good place to try to get long. Now somebody else went long right here, and what he did, he didn't let this bar close. He's anticipating that it's going to bounce there, and he's trying to think way ahead. Now you don't want to anticipate that far ahead because he got in this trade and it just dropped straight down on him. He had a loser. So don't do that. Wait till this closes and then put your buy stop right there. And then if it would have broke higher, but notice by playing it properly, you didn't get a bad trade there. It doesn't break higher till here and you would have had a winner. So follow the rules. Most of the time when people are losing, they're just not following the rules. They're trying to tweak the rules. And we've already done all that. We've got this down to a science. We know what works. So if you follow the rules, you got a lot better chances of having success. If you try to change the rules to fit some of your other trading ideas or some of your own thoughts, you're probably going to have a lot more losers because we've already done all that. I've already tested all that stuff that you're trying to test years ago. It doesn't work, or I'd have it in the manual, or I'd be teaching it to you. Do it the way we teach it to you and you'll have success, or you'll have a better chance at success. But anyway, we're just, for some reason, this becomes kind of the support here. Notice we just keep bouncing there. You just extend this line on across, and this has become your support. The range just kind of moved up. You don't really get another good setup down here, but it doesn't matter. You're getting setups, the next setups come off the high. So you're moving up here and you get a first entry and then there's a second entry, but that signal bar is not good enough. It's a long way away from the EMA, and that's proven support. So if that was one tick lower, if you had a good signal bar, by all means go short right there after that many turns down. But if you just wait, notice you make that low and you come back and you get a first entry and you get a second entry right off that trend line, and that really kind of confirms it. And that's not a perfect signal bar either, but it's a lot more it's bearish enough on a failed, notice that's a first, actually that's not a failed second entry long because you got a new high here and it's just a first entry, but it still, you would expect with that big bearish leg, you would probably want to look for a measured move if it starts back down. So you're just looking for a reason for it to start back down again. And that gets you right back down here to the lows. You see it bounced right there. But anyway, that's a second entry short with a average signal bar. It's not a great one. That's the reason it's green. But it comes back here, it shoots through the EMA and comes back right here and gives you a failed second entry long. And you still got plenty of room, so that's the better place to go short. Comes back again here, but you can't, that signal bar is too big. There's no way to enter there. There's another second entry here, but we just came off the lows, so where are prices most likely headed? Back to the highs. So as good as that looks, notice that there's a doji in there, one with no body. There's 3 or 4 bars. Skip that, because this is what will happen. It'll break lower and turn back, and a lot of times it'll go all the way back to the trend line, or it might shoot straight up and reverse off the lows and stop you out. But when it makes the failed second entry long and gives you that bearish bar, if you've got enough room here, by all means take that short, because we're probably coming back down to, they've got people trapped right there probably. It'll probably run back down here and test this before it goes higher. So I marked that one green. But the only reason that's green is because it's based on how much room you've got there. There's plenty of room on my chart. And I wouldn't be afraid to take that trade at all. Because you've tried to go higher 3 times and you tested the EMA and you double tested it again. And look how bearish that is. So then it bounces. You can't go long right there, but when it tries to go lower again and gives you a nice double bottom, and notice that you got those lows, so it's another double test, just go long right there. And if you catch that run, you catch the low of the day almost, and you get a runner there and you ride that all the way up, or at least you ride it till it starts correcting again and you exit, and then you can look for another one. But you could technically ride this all the way up, at least back up to here. I don't know if I would ride that out. When it starts going sideways right there, you might hang on and put your stop under the lows. Just move your safety stop up to lock in your profits and see what happens. And if you did that, you could have got the next leg up. You just measure that leg and look for the next leg. And notice right where notice how it starts correcting there. That's people exiting based on the measured move. But this thing just rockets on up. Once it broke through there, I guess, I don't know why it did that. I don't know if there was a news item then or what. I don't think there was. But for some reason, it just rockets on up. But you get that big overshoot, and that's not a good sign. It's not going to sustain that very long. And guess what? Next thing you know, it's trending lower. So the odds are you're probably going to get a failure out of here at some point. It's going to want to come back and test this breakout. Prices always do. And notice they come back and test it. If it bounced here and you got to set up to go long, that would be a breakout pullback long. It's when you push through resistance and pull back and test it and it acts like support. Or you push through support and it comes back and tests it and acts like resistance and goes lower. That's a breakout pullback. Suddenly, it's one of those deals. I got 4 or 5 questions for the same breakout pullback, coming all the way back, breaking out up here, and then coming way back down here somewhere and testing this. And that's not a breakout pullback. So I don't know if you guys are all working together or if it's just a coincidence, but it's just odd how I get those group of questions and they're all similar. So, but anyway, we come up here, we pull back, and I drew this trend line off these highs here and pulled it down. And somebody else did this today and sent me an email, and they were proud of themselves because they found a good trade. I don't know if it was right here. I can't remember if it was this exact spot, but he learned that by watching me show you how to do that on the videos. And people will tell you can't do that, that trend lines are subjective, but that's not true. Trend lines are not subjective in any way. They might be subjective to you, but if you know how to find them, they're not subjective. Trust me on that. But anyway, we come back and we make that low. We try to go lower once, we try to go lower twice, and you get that nice bullish bar right off the trend line, right off the EMA. You get a double test of that test of the EMA. That is congestive, yes. But when it tries to go lower 3 times and fails, it's going higher. Now, you don't know if it's going higher like that, but you're at least expecting prices to continue up here and try to get to the high side. And most likely, you'll get a leg like that right there. And that's what we're really looking for. And you can see we went basically right to that. And that's where people started taking profits, and that's why it started backing up right there. But once, I guess, enough of them exited and more buyers shot in, it shot higher still. And it shot right on over the upper trend channel. And that's not a good sign. That means the market's getting overdone. So you're probably going to, a lot of times when you get a big overshoot like this, you won't get a retest of the high. And guess what? You didn't get a retest of the high. Well, I take that back. You did right here. But you didn't get one right there. The market just sold off. And that's the other thing. You want to measure the measured move here. I already showed you that one. But I would measure this leg as well, this whole thing, and move that over here for when we went higher. And we didn't quite make that. You can see we came up short, but that's because we did the measured move on the range, and it was the range held right there. Actually, by the end of the day, we probably did get real close right there to meeting that measured move. So I got to speed it up here. But that was another great move, and you would have had another runner right there. And just at least ride that measured move if you don't do anything else. But I would have probably moved my sell stop up there just in case. It went the whole way, and it almost went the whole way. So if you had a runner here, just start moving your safety stop up below each new swing right there. And eventually you would have got stopped out probably right there. And you would have got all of that with maybe 2 points. Can't beat that. I mean, if you can get all but 2 or 3 points of a move like that, you did really well. So anyway, you get the overshoot, and guess what happens? You come back down here, you make that low, you test it once, you test it twice, prices broke lower, turned and went out the other side. You could have actually gone long right there, but when it when that's an engulfing bar. It broke lower and turned and went out the other side all in one bar. It just engulfs this bar to the left of it. Well, when you see that and you're looking for a possible long, then when it breaks lower first, when it breaks out the opposite side for the side you want to enter, it's like a little trap. When it broke lower here, it traps people that are trying to get short right there. And that's why that rockets up like that all the way back up in just 2 bars. Because all those shorts had to exit. All these people trying to pick a top over here had to exit. And as soon as they exit, then look what happens. It goes right where they thought it was going to go. So don't try to pick tops. Wait until you get a double test or a trap or something, and that's what happens here. Notice that little break higher above that double top, and now you got a double test of that support and a failed breakout, and look how bearish that bar is with all that room back. And that was a quick, easy move. If you'd had another good, technically you could have traded that short right there too. What the heck's going on? Technically you could have traded that short right there too, but because it's a failed second entry long, so it doesn't matter so much about the signal bar. But in an uptrend I wouldn't do that, because you're trying to pick a top. So just notice it did trap people. Look how it drops down. But I don't think that's a wise trade, because it could hit the trend line and bounce, and you'll be in a world of hurt there. You'll have a big loser. So, but anyway, we're moving down. We come back and we test the trend line right there. That's too congestive to take that trade. And then you get a lower high right here, but look, it's still real congestive, and this is your signal bar, and it's too bullish. And so, but look what happens. It breaks out of that congestion, pulls back, confirms that trend line, touches the EMA, and gives you a big bearish bar. That's where to go short. Being impatient and trying to enter here probably get you stopped out before it goes exactly where you thought it was going to go to begin with. So just be patient and wait on good setups. That drops on down, it works sideways, and unfortunately you just don't get another good setup there. Same thing here. You might, I didn't mark this trade because there's 3 bars, 4 bars stacked up there before it's over. This one has no body, really, or a little body. So that's congestion. And we're not back to the EMA, but that's the original resistance from the range from this morning. If you come back across there, that's the resistance right there. So you would like to get a chance to go short there if you could, and so you might take that trade, but without it getting back to the EMA yet, we just came off the low of the trend channel. I just think it's too risky. It worked, but the next time you take it, it'll tick 1 tick lower and it'll head right back to the trend line. So, and when it actually broke through the other side here and gave you that bullish bar right there. Now that's an inside bar, but notice it's got matching lows, so you can use that for a signal bar. If it was totally inside, I'd say nope, it's not reliable. But when it has those matching lows, you're generally okay with them. So you could go long right there just to ride it back to the EMA. You know, normally I'd say don't try to counter trend trade, but this is a range day, and this is a big overshoot. You're a long way away from the EMA. It's a little risky, but guess what? If you catch that, you may catch the low of the day again, or an important low, and guess what? Look what happens. This takes off. You would have had a runner, and you're working on that next leg, or at least back to the upper side of the measured move up. And that's exactly where it went. It actually pushed a little higher. So you would have had, and you wouldn't have been too hard to ride a runner up on this one, because you don't have any big corrections. Look how shallow all the corrections are. That's what you really want on a good runner, is real shallow corrections. And this doesn't look like it, but that's a strong move up. When you start to see a lot of little bars that have a lot of stems on both sides, and they look like little dojis and stuff, and they make very shallow corrections, and they just keep working in the direction of the trend, which can be up or down, that is a strong move. And this thing spiked. This is a spiking channel, and that's the first break of it right there. So I liked this one just because, look, you're moving up, you get a first entry, and then you get a second entry, and it bounces right off the EMA. Draw your trend line there, just see what comes afterwards. I like going along there because it looks like a short trap. And notice how it turns up real quickly. And it heads on higher. And like I said, this doesn't look like it. This is a strong trend. and then it pulls back here, first entry, second entry, and that's not a great signal bar, but that's close enough to the top 1/3 on a strong trend with very shallow. If it breaks higher there, you're probably going to at least retest the high. Your hope is prices are going up here, but you're going to at least retest that high most likely. And look how it rockets up again, because people are trying to pick a top again right there. And that's a nice move up. And you get that failed break higher, and then you get the lower high that retests the resistance area again, gives you, and it actually broke higher and turned down. Just go short, one tick under. That's another engulfing bar. Technically, you could wait and go short right there. It's a little dangerous right into the EMA, but on a range day, you're going to have to do that. It's just part of it on most cases. So, especially when your range is not real big, I wouldn't be afraid to take that trade with that little bit of room right there. I mean, it's pretty close to being 4 ticks anyway, because I mean, a tick is just that little bitty tiny move right there. So there's probably 3 or 4 or 5 ticks in there anyway. So you might be able to get 4 ticks before you get back to the EMA. It's close, so, but I like that trade. Then you get a first entry, second entry. I marked this one green just simply because it's not a great signal bar, and they're just two side by side. But you got a trend working down here, and you just came off the highs. And even if you drew, this is another one where you draw it off the highs and pull it down. So, and you could have instantly dropped the midline in there and saw that prices were playing off both sides of it. And notice that little gap right there. Prices gapped over that line. You'll see that a lot. I haven't talked about that in a while. I haven't seen it as much lately, but you'll see prices. If that's one way to know if your trend line or midline are correct, because you will see prices gap over it. And a bunch of you will send me an email and say, "What gap? I don't see a gap." Well, those two bars, they're not overlapping. It closes. This one, the low is here, and this one opens at the low of that one. So there's no overlap there. It just kind of gaps over that midline. And I don't know why it does that. I got no answer for it. All I know, I've been looking at charts for 20 years, and I see it over and over and over and over. So I know it's valid. I know it means something. I don't know what it means. I don't care what it means. I just know what it means to our chart, and that's all that matters. And I think some people call those thin spots. Maybe there's not a lot of trades because people are putting their trades on both sides. I don't know why it happens, and I don't really care. I just know that if I see it, I know that it means something. So go short right there, and you'll look for your next leg down. Measure it from here first, and if you continue on, measure it from up here. But there's that part, and then let's just measure the whole thing. And you notice you didn't, that was a little aggressive. The first one was probably within a tick or two. So you're going to be somewhere right in there. But if you draw that trend line and drop it down, then you know it's probably going to bounce off that trend line. And guess what? It bounces once, then it comes back again, and it breaks lower and bounces and turns up. Again, that's an engulfing bar. Just go long, ride that back to the EMA. That's all you're looking for. And if it goes higher, then that's just gravy. Comes back again. This is basically a double bottom, so I'd treat that like a first entry and then a second entry, and it bounces right off that trend line again and turns another engulfing bar. Just go long one tick above that if it shoots back up there, and look at it. It trapped those shorts, and look at it go. Because they don't have any clue that there's support there, there's a trend line there. It's just amazing how, and that's because people are just jumping around trying to enter on every turn. It's been trending down, and they don't realize that the trend's ending. We overshot it, meaning we may get a break. You get a break, you get a move down, and now it's just crawling up this trend line. Eventually, if it keeps holding, it's going to shoot off again, and that's what happens right there. Once you got that double test with a good signal bar, with that little trap too, and off it goes. And that got us into 2 o'clock. I don't see anything else there that I really like after that. So trend's up, so you want to wait till it gets back here, and that's well after 2 o'clock. So 30 minutes a day. It took me longer than I wanted, But there was a lot to talk about today, so I hope it was helpful to you. I'm not going to beat around the bush. I'm going to wrap it up so we don't get too long. We'll be back again tomorrow, and I've got the thumbs up on my eye. Everything looks great. The doctor was proud of it. Says everything looks good, and I didn't think they were going to want to do my other eye. I do have a, but he said that because I have a bifocal in now that he recommends I do both eyes just because it kind of throws you out of whack. But I've had trouble seeing in that right eye for over a year now, so I'm kind of used to having a little different vision in both eyes, so it doesn't really bother me. So I'm probably going to wait 6 months or so before I do the other eye, unless it just starts getting worse. But I'm probably going to go ahead and do my other eye too, and then I won't have to wear. I still got to wear contact in my left eye, so I'm one-eyed contact guy now. It's kind of odd, but I just figure I might as well go ahead and fix it eventually, and I won't have to pay for contacts or glasses. I have to worry about those ever again, so, or at least not anytime soon. So, but I'll keep you posted on that. But for now, I'm just going to kind of be status quo. I'm real happy with my vision now, and I'm comfortable trading. I'm not straining my eyes anymore, and I can see the little bars, and I'm real happy. So appreciate all the notes and the prayers and all that, because it came through for me. So, but I'm going to wrap it up. We'll be back again tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.